What's going on, everybody? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this video are the breakout levels that we are very, very close to. So there are a couple of key technical levels that we need to go over that if we can break and hold above, we could be in for some very, very bullish momentum. So make sure you keep these price points in mind going into the next couple of trading days and weeks. Now, in addition to this, we also have to talk a little bit about the Ortex data and the options chain going into the rest of this week, because I think there is still a lot of confusion about what we're exactly seeing at this current time when we're looking at the options chain. Now, in addition, we're going to talk about Max Payne as well. And there's something very interesting going on with hedge funds as a whole right now. They continued their losses in the month of June, but there is something else that we need to take a look at too in terms of the redemptions. A lot of money is flowing out of these investment institutions and these funds that are managing outside money. Now, when this happens, if they are already experiencing losses, money getting pulled out decreases their assets under management even further, which puts even more pressure on the levered up positions that these funds are already holding. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the day today at $16.54, up $1.17 or 7.61% on the day. Very, very solid way to start off the week. Now, when we come over to this chart right here that you guys all get access to once you guys sign up for our group, we're seeing some very important things. Again, we saw that cross up. We're seeing consolidation and holding above this 200 EMA on this 4-hour time frame. And we're also seeing price action use the 13 EMA as a dynamic level of support. That is a really, really bullish thing to see. Now, when we talk about a couple of these price points here, there's one that really sticks out right here, and it's this one right here, this $16.67, $16.60 to 67. If we can break and hold above this price level here and form new support, we could then kind of spring off of this level and come all the way up to potentially, let's see here, $18.91. After that, we are seriously in a conversation about seeing the $20 range, 22, and even potentially getting all the way back up to that previous high that we were seeing before that illegal halt day at $34. So those are the couple of things that you guys need to keep in mind going into the next couple of days and weeks. Again, we do have earnings. We are going to be getting some more economic data, GDP data, and another rate hike going into the end of this month as well. So again, this is what we're looking at on the chart. If we start to see these things play out, we could be in for a very, very fun month of July. And again, if you guys do want more access to this trading strategy, all of the alerts, all of the over 55 private live streams, the learning curriculum, the algorithms that we have for the 9-to-5ers, the day trade alerts, make sure you check out that link down below. Now, let's take a look at the Ortex data that we saw today. So we have 17.94% estimated short interest here. We've got 11% max cost to borrow, 10.71% average, and 9.97 on the minimum. Shares on loan currently sitting at 130.41 million. Now, the Ortex data isn't telling us a whole lot right here. We can't really make any investment decisions based on this. A lot of us are already in this play right now. And what the Ortex data is really telling us at the current time, it's just kind of confirming that, yes, these stocks are still very, very heavily shorted. Now, let's talk a little bit about the options chain because it is looking pretty good at this point in the week. It is only Monday. We are going to see a lot of price fluctuation going into the end of this week. But we've got 39,000 calls in the money with only 1,939 puts. That is very tilted to the call side. So we are going to be seeing a little bit of net hedging. In terms of going out and buying shares, this is the market makers. They go out and buy shares in order to hedge a lot of these calls that they have sold. Now, again, there's not many calls out of the money here, so the overall open interest on these specific expiration dates is going to be a lot less since we just saw previously last week a monthly options expiration period that had a metric boatload of options that were expiring. Now, speaking about Max Payne and options, the Max Payne going into the end of this week for AMC is $14.50. as we can see here. Now, does that mean that we're going to come down to Max Payne? No, it doesn't, but it's just something to keep in mind. I personally wouldn't make any trading decisions based on what the Max Payne is showing. it's just kind of something to keep in mind on where the option chain is setting up on any given week. Now, I want to talk about this situation going on with hedge funds right now. We've seen on the crypto side, 3AC really having significant issues. We've seen a lot of funds in the equity side or the stock market side having significant issues this year as well. And we have some aggregate data of funds as a whole. Hedge fund returns are down negative 2.4% in June of 2022 as a whole. So this page right here goes over a lot of the different data, but multi-strategy funds saw the worst losses with a return of negative 2.8, with equities and fixed income arbitrage the next worst at negative 2.5 and negative 2.4% respectively. Event-driven and global macro funds held up the best in the face of the declines, but still experienced losses with a negative returns of negative 0.7% each. Now, when we scroll down a little bit further, capital flows. This is where things get a little bit interesting. Even as inflows jumped to 15.7 billion, more than 50% higher in May, redemptions also spiked at 25.8 billion, resulting in total net outflows of 10.1 billion. The largest funds with more than 10 billion of assets saw the lowest net redemptions overall at 1 billion, while funds with between 1 and 5 billion and 5 and 10 billion saw the largest net outflows, with investors withdrawing 3.3 billion and 3.2 billion respectively. Now, speaking a little bit further on what we were talking about in the beginning of this video, you have to think about how a lot of these large institutions are actually setting up their portfolios. They are using leverage. They're going to, let's say, a Goldman Sachs, a JP Morgan, whatever prime broker that they decide to use, in getting leverage, meaning that they're essentially taking out loans from these brokers in order to gain levered positions in the market. Now, we just saw the data that said, one, these funds are down on their positions only in the month of June. They are already taking significant losses in 2022 as a whole. So in June, they declined again. And we're seeing some pretty high net outflows. So it's a double kind of whammy that you're seeing there, where not only are their portfolios going down in terms of the value of the equities or any other strategy that they have, whatever they're investing in, but their investors are also coming to them and saying, hey, I want my money back. And if they have passed that little redemption period that a lot of these funds have, they have to then give these investors their money back. But again, if those positions are levered, then that's going to create a very significant issue, and it makes it a lot harder for these funds to hold their positions. So going into these next couple of weeks and months, going into July, this is data that we all need to be aware of. Again, these funds are having issues, people are pulling their money out, and we're also headed into earnings season. And as we've seen in 2022, earnings season has been incredibly volatile, with these financial institutions either making a lot of money if they have a short position on some of these companies, or losing very significant amounts of money if these companies report lower than expected earnings. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next video.